Good morning, everyone. Welcome to Midwest Market Solutions Market Insider early morning commentary. It is Thursday morning, August the 18th. Export sales just out this morning. Let me look at them here. 47.6 million bushels for corn, a good number. Soybeans at 65.3. I actually expected we'd be much higher than that, but that's a very strong number normally. And wheat at 17.99 million bushels. Now, overnight, we've heard rumors that China has bought between 3 and 6 cargoes of U.S. soybeans once again, and that, if true, will be reflected in this morning's private export sales announcements. We saw yesterday 381,000 metric tons sold to China, and on Monday 119,000 metric tons sold to China. Tuesday we did not hear any news as far as private sale announcement, but I do expect we'll see something in the way of sales this morning. Now, outside markets here are a little bit supportive with the dollar lower. Crude oil is trading about 30 points higher this morning. This is coming after the FOMC minutes were revealed yesterday that talked about an interest rate hike imminent at some point in the future. It's unlikely it'll be in September. I think in December it's much more likely, but that has caused some weakness in the dollar yesterday and overnight into this morning. Grain markets here. We would expect we'd see some support, but the bean oil is trading lower in the overnight. In fact, beans started off higher, took out on Wednesday's highs, and have now traded lower. So we've got an outside day lower going in the soybean market. So this type of reversal is what trade will be looking for when they're trying to make a decision if the soybean market has topped or if it still has room to the upside. But clearly we've shifted from a supply market into more of a demand market, and once harvest, I think, resumes in earnest, we'll see that focus shift back to supply and prices turn much lower. Cattle should be lower today, especially on the opening. We're likely to open lower. Watch and make sure that we don't see some sort of hedge lifting rally that would give cattle futures a recovery and an outside day higher and a bullish reversal for that market. So we close right on the lows of Wednesday's trade. I would expect we'll see follow-through selling, and from there we may see a little bit of buying interest or hedge lifting that will lift the cattle market. So we're still looking for 108.50 as our downside target. We'll fill that chart gap in the October contract. Everything else this morning looks pretty ordinary. Not a lot of other news overnight, but we'll be back later on, maybe after the close sometime or this evening with closing comments. We're still short